Good morning everyone. Welcome to Banao Bharat's Friday live session. We had a very massive fall on Wednesday, being the monthly expiry, and also from or because of some negative reports from a US research agency. In continuation with Wednesday's week closing, we have again seen today also markets be opening very weakly, and if you start seeing the chart, here it is. Nifty opens at around 17,995. From there on, now currently trading at 17,761, which means 200 points from the day's high. So there was a mild support at 17,845, which has been taken out and currently trading below the support of 17,845. So this is the chart of Nifty, a very weak opening. Today is the FPO of Adani also. So we will quickly look into the Adani before going into other stocks. Before that, we will finish off with Bank Nifty. Bank Nifty opened at 41,800. There was a breakout level at 41,020. Now currently trading at 40,932, just about 100 points below the breakout of the first candle low, which is 41,020. So this is the chart of Bank Nifty on the intraday time frame, currently trading at 40,930 levels, and Nifty currently trading at 17,771, made a new low at 17,776. So because it's one of the biggest FPO, we will look into the Adani Enterprises chart. Here it is, opened at 3364 and made a first candle low at 3194, and from the second candle onwards it has been falling down and currently trading at 3214. Just cut the sell level at 3194 and now trading around 3200 levels. So this is the chart of Adani Enterprises. Well, for a technical trader, whether it is if there is an FPO, or if there is a results, or if there is a bonus declaration, or if there is any corporate events, or if there is any macroeconomic developments, none of these things should really matter. For a technical trader, for a trend analyzer, for a price action based trader, what that matters is the price levels, and based on that price levels he has to just take his positions or exit his positions based only on the price action and volume data or any other indicator which he is using. So do not confuse yourself with adopting different measures at different times. If there is a big event, do not fall into the trap of one day looking into the events, second day looking into the technicals, third day looking into another system. Each day focus on one single system and try to hone your skills or develop your skills or practice those setups in a much better way, so that over a period of time you will become master of one, and also at the same time, while you become the master of one system or one setup, you will have the overall understanding of the market also. So being a technical trader myself, I wouldn't place much importance to the FPO or what's happening at the macro level. So at best what I would do, I would avoid trading on those days. Avoiding trading on a big event day is still acceptable. Instead, entering into a trade based on the events, not based on the price, is not acceptable, because for a trend follower, for a technical trader, what he has to always enter and exit is based on the price action or his setup rules, not based on some event which might for which the public knowledge will come very later on. Many a times the information to the public will be the last, so you never know what is the right information, or even if you know the right information, will the market behave the same way, the way you interpret the information, or will the market interpret the information entirely differently, is the whole game. Even when it comes to the technical trading, if you see, even the price, at one price, one technical trader thinks it is a price to buy, another technical trader thinks it is a price to sell. That is why there are transactions happening at every tick. At every tick there is a buyer, at every tick there is a seller, which also means, like, at every tick every trader thinks differently, and that is how the market should be. And whoever is right most of the time is who will win in the game. So you are pitching against other fellow traders who are also having some kind of rules, some kind of setup, some kind of knowledge, some kind of experience, some kind of methodology to trade on a daily basis. So it is not like, you are not trading against very amateurs. There are players who are really well versed in the game, both fundamental investors or fundamental traders or technical traders. So you should be aware, like, you are pitching yourself against the people who are knowledgeable in the field. So it shouldn't so happen, like, you are the amateur in the whole game and not the others. Being that the case, you have to know, like, you have to know your rules very well, you have to know your setups very well, you have to know your entry levels very well. You should know how to put your stop losses or how to exit your profit trades. So what you have to, recently if you see, there was one report by SEBI which says, like, 90% of the retail traders are losing money in F&O, which means, like, around 89% of the F&O traders, the retail traders, are losing money, and it's only 11% of the retail traders are actually making money. So that being the statistics, you shouldn't end up being the one among the 90, you should be one among the 10 or 11% that is currently actually making money out of retail information, which is actually, like, if you see, it is I was little surprised. I was thinking the retail participation is big, I know, but I was of the opinion, like, the retail success ratio is less than 5%. I was always under the impression it is most of the time 95% of the traders are actually losing money, and it's the 5% of the traders are who are making money. But I was surprised to see the SEBI reports. In India there are smart retail traders. Please note, there are really smart retail traders who are actually making money with the common information, in spite of all of those so-called fund managers having huge capital, huge AUM, in spite of so-called fund managers who are, like, coming with a very sophisticated degrees from IIMs and IITs and industry experiences for many years and many decades. In spite of a retail investor pitching against such stalwarts, pitching against DIIs, pitching against FIIs, and pitching against very well informed high net worth individuals in terms of traders or investors, if a retail investor in F&O on a daily basis, if he is making money and that percentage happens to be 10% of the overall retail traders, I would say this is a very good percentage, and we should be happy as retail traders, and we should be hopeful and we should be positive. Yes, it is possible. If 10 people among the so-called common man or so-called retail investor, so-called ill-informed investor is making money, then definitely we can do also better. So do not be afraid of FIIs or DIIs participation. Do not think, like, they are moving the market, they are controlling the market, they are operating the market. Believe me, nobody is having any much clue. In fact, in today's domain, if you see, in today's world, unlike before, unlike the early 90s or early 2000s, where the information was private to only few people, but today it is not so. Whatever the FIIs are seeing the information, whatever the DIIs are seeing the information, in fact the retail participants also have the same information, and almost at the same time they have the same set of informations also, which means if a MBA grad or a chartered accountant, or if some other, like, industry expert is analyzing the data, if you spend some time on learning certain skills and you also have the same set of information, then you can also be a better decision maker, and you can also be a good investor or a good trader. It is possible for a retail investor today with a small amount of capital and enough skill set and the provided information, he can make a living out of trading. In fact, in a way, I was very happy when I saw that report at least 10% of the retail traders are making money, and this percentage I am sure will increase over a period of time. Having said that, this is Adani Enterprises. The chart looks not so good. It is in the downward spiral for last 2 days. So if you are a trader, if you are a compulsive trader, there are so many other stocks to trade. If you are an intraday trader, then you can pick up just Nifty and Bank Nifty, and depending on your levels you can go ahead and do the trading. Before we once again look into the indexes, we will quickly look into some of the banking stocks and see if something is happening there. This is the chart of Axis Bank, opened at 895, currently trading at 873 around the day's low. It has just now cut the first candle low at 875. Is it the continuation? Yes, it is a continuation of the downfall that is happening for quite some time. And let us see what's happening on Bajaj Finserv. It is slightly higher today, opened at 1320 and currently trading at 1341. There is no immediate support or resistance levels available for this stock, but then watch out and see the volumes. There is not much volumes today. You can see on the downfall there was good volumes, but today it is little bit of sideways movement and not much volumes in Bajaj Finserv. This is Bajaj Finance. Same, it is in the sideways movement. It had a good fall on Wednesday. Almost all stocks had very good fall on Wednesday, and today some stocks are just taking a breather, moving sideways, checking what the index and other things are doing, and based on that they will work on the revised levels, and until then they will prefer to stay away from the participation in some of the stocks. So this is Bajaj Finance. If you have to really trade Bajaj Finance, currently the buy level is available at 5922, and if you have to really go short, then wait for 5768 levels. Next, Bandhan Bank. Bandhan Bank opened at 248, came down to 237, from there made a pullback up to 242 levels, now currently trading near the pullback high of 242. So this is Bandhan Bank for you on an intraday chart. Looks weak. Bank of Baroda also in a downtrend, opened at 171, now trading lower and lower, 163. Bank Nifty 40,872, new low is made, 1065 points down on Bank Nifty, and Nifty is about 238 points down. So here we go with let me just show you Bank Nifty going low below 41,020, currently trading at 872, 895. This is the chart of Bank Nifty, made a new low and about 1000 points down. This is Canara Bank, opened at 308, was having a breakdown level at 302 or 301.85, currently trading at 294, about 7 rupees below the entry level. HDFC 2703 was the opening, currently in a downtrend, and from there on it is not able to take out the first candle high or the first candle low, absolutely in the sideways movement. HDFC Bank, the opening candle high 1645, opening candle low 1602, and rest of the candles are within the first candle range, and it is also in the sideways movement. Next we are seeing ICICI Bank, opens at 861, immediately in the first candle itself with a big volume. You can see here there is about 6 million shares traded, which is 60 lakhs shares traded. So big volumes on ICICI Bank chart, made a first candle low at 835, which happened to be the sellout level also, currently below the sellout level of 835. Kotak Bank opens at 1765, currently trading at 1732, also in downtrend. Most of the banks are actually in downtrend. So let us see SBI. Well, opens at 571, now trading at 554. Very quickly it has come down from the 600 620 levels. You can see here the daily chart of SBI. It has some kind of support at 571, which has been broken down on Wednesday, and after that it has not moved up. So this is the chart of SBI on daily time frame. The recent high was in the month of December 630. Before that you can see this chart of SBI on daily time frame had moved up from 475. You can see here August low was around 475. From there on went up to 547, came down to 508, went up to 578, came down to 518, went up to 624, came down little bit to 594, went again to 623, made a lower low at 623. You can see here this was the high at 624, made a lower low at 623. It came down, made a lower high at 623, made a lower low again at 571, and from there on it made a high of 629 and complete fall from there, 554 now. From the highs of 629, it is now trading at around 550, which is about 80 rupees movement from the highs. And if you have to see Bank Nifty on the daily time frame, we will see if any long-term analysis can be made out of Bank Nifty. 41,640 was a crucial level. This level we saw even on Wednesday. Wednesday itself it cut the low and closed almost towards the breakdown level. You can see here August, September, October, November and December, almost for last 5 months, from the lows of 34,541. From the lows of 34,541 went up to, you would say, 38,000, came down 38,000 and again went up to 41,000, came down to 37,000, from there on 42,000, and from there on it went up to, what is this high, is something around 43,300, came down to 41,640, made a lower low at 43,634, lower low at 43,634, and again it is now cutting 41,640, trading below 40,890 levels, which means around 600 plus 200, 800 points on the daily time frame. And whenever there is a sell signal on longer time frames, you can expect bigger targets. So from here on, if this momentum continues, you can be sure it can come and retest the levels of 38,520. Will it come? How many days will it take? Or will it take support from somewhere here and start moving up? All of those things is left to the time as we go along in the month of February. This might try to come near to 38,520. It might even cut 38,520, or it might take support slightly above 38,520, and from there on it might make a pullback, and from there on it might decide to go further up or come down. So all of those things are just a possibilities. As of now, at 41,640, you have to remain short on Bank Nifty on a daily time frame. At least for the short term, the bank index is now looking weaker. We will also see Nifty on a daily time frame. Here you go, 17,820 was a critical level. It has today started trading below 17,820. Well, from the lows of mid-July, lows of 15,860. From 15,860 we have seen almost 19,000 on Nifty futures chart. Went up to 18,000 first, came down to 16,760. Went again up to 18,123, then went up to 18,998. From there on it has been making lower lows now, and again once again breaking down critical levels, and these are breakdown levels which will not be showing strength at these levels. If it were a support level, then there could be a possibility of very quickly getting over with the sells, and maybe Nifty would have, or Bank Nifty would have, or any stock would have slightly started bouncing back. But on the daily time frame, these are all falling after a big up move for last 5 to 6 months. We are seeing up move since August or July, you would say. Since July, since there is a very good up move, since a lot of things were covered, lot of distance was covered in this last 6 months, this fall which is now giving sell signal on the daily time frame after a long gap, it will not end so very soon. So where is Nifty headed? If you have to really make any initial assumptions, then it would be up to 17,000 levels. Another 700 points of gap is visible for Nifty to move down. It might take support well above this level, or it might even break and keep going down. But then at least for now, if you have to trade, then you have to take a view. Yes, at least there is a possibility of another 700 points fall from here on. Will it happen? We don't know. Should it to happen? We don't know, depending on our positions. So having said that, if you are a technical trader, remember to trade with your rules, your setup. Fine tune your work as a technical trader is to fine tune your setups, to work on yourself, to develop your skills, to work on your personal lifestyle, to work on your habits, to work on your characteristics. So this is what you have to work on, and your trades will improve over a period of time when you work on yourself. Having said that, if you are liking the content on this channel Banao Bharat, do subscribe and share with your fellow traders. We will try to bring in a little bit of insights of whatever we know on how we read the charts on a daily basis, and then if it is helping you, you can make use of those things. And if you want to learn more, you can always call us for the Trading for Living program, and we will be happy to mentor you on a daily basis. Well, we will once again meet on Monday morning. Have a very good and peaceful weekend. Let us once again come back to the game on a Monday morning with a fresh attitude and with a fresh perspective. Om Swasti.